with Bitcoin and Ethereum and almost all cryptocurrencies remaining every day in the headlines and the newspapers, more and more people are jumping into the cryptocurrency market. Everybody wants to know, how do I get Bitcoin? How do I buy Ethereum? Well, this is done through a cryptocurrency exchange. So there's many things you need to know about a cryptocurrency exchange before you actually get involved, but it's not very complicated. Cryptocurrency exchanges are websites where you can buy, sell, or exchange cryptocurrency for other digital currency or traditional money like the US dollar or the euro. For those of you who want to trade more professionally or want to have a bigger stake in cryptocurrency, you will need to use an exchange that requires you to verify your ID and open an account. If you want to make the occasional straightforward trade or buy just a small amount, you can also find platforms that don't require you to verify your identification. So an exchange is where buyers and sellers conduct. So for instance, in an exchange, you want to sell your Bitcoin. You're willing to sell it for $16,500, and you're posted there almost like eBay. Okay? And it says, number 72945 wants to sell Bitcoin at 16,500. You're willing to buy it at 16,500. So you go in and you buy. Now he may only have a half a Bitcoin, but you buy his half a Bitcoin. If he has 5 Bitcoins, you can buy 1 Bitcoin. And once all of his Bitcoins are sold up, he's gone. Okay. And you always have to then move on to the higher price, or you can place an order that you're willing to buy Bitcoin, but you're only willing to buy it at $16,300 and you want to buy 2. So then the sellers of Bitcoin will match in your order. Now, there are many different types of exchanges. There are also brokers who own Bitcoin or Ethereum or altcoin or Dogecoin, and they're selling from their ownership. So if you want to buy 5 Bitcoins, you can go to an exchange that just owns the Bitcoins, and they can sell them to you. Their prices are usually higher, and you have to buy at market price. In other words, they have a price set for buying Bitcoin. You can buy the Bitcoin at 16,500. You can't say I'll buy it later, or say let me have an order, or they have a sell price. Okay? This is actually what most people do. They don't get involved in the peer-to-peer type of exchange. Just go in and buy. Well, the fact is, if you're going to invest more than a little bit, you should find the lowest price and the best exchange to buy from, because these exchanges are not wired together. And there are different prices on different exchanges. So it's important to do a little homework before you start trading. So here are a few things you should check before you make your first trade. Look at reputation. Look at the fees. Exchanges charge fees, and they vary. It's the Wild West out there. Look at payment methods. Okay. If you want to use PayPal, you have to find one that accepts PayPal. If you're using a debit or credit card, sometimes countries won't allow your debit or credit card to be used. Okay. So you have to be careful. You have to find one that will accept your payment method. You also have to find one order types. Can you set limit orders or market orders? Market order means you're just buying at the current market price. Limit allows you to set a price in which you are willing to make this position. Then a lot also offer what's called margin trading. They will give you a loan to buy additional coins with your current coins as collateral. So the biggest you can get is 3 to 1. So if you own 2 coins, they will allow you to use that as collateral to actually use 6 coins to buy or sell to make a profit if Bitcoin moves up or down. So a margin position is simply a way of tracking your profits and losses. When you buy a Bitcoin on a Bitcoin USD book, you are entering a long position on Bitcoin. If you sell Bitcoin, you are entering a short position. You do the opposite to close your position. Now, Bitcoin interest is growing lately, and with that comes volatility. Bitcoin is currently much more volatile than any other currency, making it a prime candidate for what's called arbitrage. Now, this is a great way to use exchanges. Currency arbitrage is the practice of taking advantage of price differences between markets. These price differences emerge because certain exchanges are more liquid than others. Bigger exchanges with more trading will drive the price for the rest of the market. Smaller exchanges follow price of the larger ones with some lag. You need to look for an exchange that offers that. So there are many types of exchanges. But remember, an exchange is a place where people buy and sell their cryptocurrency. It is not where they store their cryptocurrency. Learn about wallets. That's where you safely store your cryptocurrency. It's like your bank account, your savings account where you put stuff away to be safe. Thank you very much. And watch our video on crypto wallets if you want to understand what a wallet is. Bye now.